Hey, welcome back, guys. I'm Turill Engelman with QX Financial, and I have my guest Michelle here again. And we wanted to continue our dive into the P&C world and how these different options kind of affect you, and how and what are some of the things you should do or look at. Last time we kind of dove into car and auto policy and what the minimums are. And like right now we live in the state of California. So we kind of looked at some of the minimums of the state of California. And Michelle kind of lets you know the concerns you should have for those minimums and what can happen. So what we'd like to do today is just dive in a little bit more on how these auto coverages and what other type of protections and things that Michelle feels is very important that you should have in your financial house when protecting you and your family. Michelle, let me let you take it away from there.
Thanks. Nice to be talking to you again. Yeah, so last time, in the first time we spoke, we talked a little bit about auto insurance, and just to do a quick recap, the minimum limits required in California are $15.35, which means if you're responsible for an accident, if you cause damage, people will be covered up to $15,000 per person, $30,000 per incident, and $5,000 for property damage, which, you know, it's not enough. It leaves you very open to covering claims out of your own pocket. And if it's a really bad one, you know, losing your assets, your home, your wages. And
Michelle,
you might think, if you're starting to shop for auto insurance online, especially, and trying to take care of yourself, you might think, oh, I don't need much insurance because my car's not worth anything. That's not what it's about. You're not protecting your car. You're protecting the liability of you causing other people damage to their personal body or their personal property. So if you want to protect your car, that's where your deductibles come in. You can get commonly you have a $500 deductible or a $1,000 deductible. You know, so if you have an accident and your car is damaged, you pay the first $500 or $1,000 out of your pocket, and the insurance company covers the rest. And obviously, if you're going to pay $1,000, your premium is going to be lower because you're taking on more of the risk. If you're going to pay $500, less out of pocket for you, so you pay more upfront for it.
okay. Now, Michelle, what about the person that says, you know, you gave me the minimum levels of what is required? What about the person that comes to you and says, well, I have full coverage. Why do I need this?
Full coverage is one of those things that many consumers say, I have full coverage. They don't understand what that means. Full coverage means they think they have full coverage, therefore they have good insurance. Full coverage means you have a deductible, so your own car is covered. But at what limits? $15.35 or 100, 300, 100, or 250, 500, 100. You know, it's huge amounts of difference in the coverage. So full coverage is your car is covered, yes, but how much are you covered for the damage you cause to others? If you've got state minimum limits, it's not very much. And if you're a homeowner, you're just asking for trouble. I mean, I guess most of my clients come to me through referral partners, mortgage brokers, and realtors while they're in a home transaction. They're either refinancing or buying a new home. So they have assets. They have assets to protect, and a lot of them are business people or sort of sophisticated buyers who need protection. I guess if you're just starting out and you have nothing, or you're just I'm not
What would you say? No worries, Michelle. What would you say, a lot of times, like we were talking about, people say they have full coverage. When they have full coverage, what would you say is the standard limits or numbers when people have this? In California, what is the standard number when they say I have full coverage?
If you're a homeowner and you have a good job or even if you're just out of college and you're expecting to have a bright future and a good job, you need to have, bare minimum, you need 50, 150. At least then you're somewhat covered. If you're a homeowner, I wouldn't recommend less than 100, 300, 100, just, if something bad happens, there's plenty of money there to take care of it. But honestly, if you have a lot to protect and you take your protection seriously and you want to really protect your family and your assets, you're best off with the 250, 500, 100, good solid limits. And then you're eligible for the umbrella policy, which we discussed earlier. It's as little as $300, gives you $1 million more protection, or 2 or 5, whatever you want to choose.
Thank you again, Michelle. That's some amazing information and gems you're sharing with us here. Just to help me out and slow it down a little bit, can you kind of explain again and dive into like what those 3 numbers are when you're talking about the protection? Like you talked about the 50, 100, 50. Can you just give us the different breakdowns of how all that works and what it covers?
Yeah, sure. I sped through that. I didn't want to be too repetitive from our first video, but of course not everyone's going to have watched every single video that we put out. So state minimum limits are 1535. So if you're at fault in an accident and you cause bodily injury to another person, that person's injuries will be covered by the insurance up to $15,000 per person, up to $30,000 per incident, and $5,000 property damage. And you can have full coverage with minimum state limits. Full coverage means you are paying a deductible and your own vehicle is covered. So you can have, people think they have full coverage, therefore they have good insurance. You can have full coverage and have terrible insurance, state minimum limits. So I don't recommend going, actually at Goosehead, it's a corporate guideline that we will not write beneath 50, 100, 50. 50,000 per person, 100,000 per incident, 50,000 for property damage. Because if you have less than that, you don't have good insurance, you're not well covered. And if that's the sort of client that you are, I'm sorry to say, if you care that little about your protection, it's not the sort of client base that we're looking for. We want to work with people who are serious about protecting themselves and their assets. So if you think, oh, my car's just a beater, it's worth $2,000, I don't care about it, don't insure your car. You have what you call liability only. That's when you don't have full coverage, you have liability only, but you still want to have good liability limits to protect yourself against people suing you when you're at fault in an accident.
Beautiful. If I could just ask one question building on that, right? So you said 15, 30, 15, you said 15,000 per incident, right? Per person, and then 30,000 total per incident. I think this is where some people might get it confused. So if you have 4 people that need to get paid $15,000, you don't have enough.
You don't have enough. Yeah. And yeah, so yeah, exactly. 3 people at 10,000 each gets to 30, or one person's at 25 in the hospital with a whatever broken leg, and one person just has injuries to 10,000. There you're up to 35. You're not covered, and
right.
They can sue you. And in an accident, this is what's really important. And getting back to that umbrella, if you cause an accident like that, I mean, these people, it's a legitimate claim. You know, nobody wants to be in an accident. Nobody wants to cause an accident. But if there is an accident, it's a legitimate claim that their expenses should be covered. But these days, especially in this country at this time, there's a lot of lawyers looking for the big payday. So if you actually do have an accident, a legitimate claim, get yourself the right kind of lawyer, and they're going to go for the fences. And that's why 1535 is just nowhere near enough. And so, yeah, the ultimate, just to jump from all of the middle grounds, the ultimate is the 250, 500, 100, 250,000 per person, 500 per incident, and 100,000 property damage. It's actually surprisingly very cost effective. The economies of scale really kick in as you get the higher limits, because the insurance companies want to encourage you to have those higher limits, and they don't make it much. It might be $5 more a month to go from 100, 300 to 250, 500, because They want to know if you're in an accident, you've got $250,000 there to pay out before someone starts suing you and then accessing that umbrella policy that you hopefully have. And insurance companies will regularly settle a claim, even if it's a pretty dodgy, bogus claim. They'll settle it for more than you think. You and I, as just individuals, will think, what? He sued me for $70,000. That's bananas. I barely hit him up the back. But they'll settle for $70,000 rather than risk going to court and paying all of those court expenses and then, you know, it just blowing up into some headline.
I can totally relate, Michelle. You know, as you're going through this, I had a flashback in my head. This maybe 3 or 4 years ago, but I got T-boned in my car, but I was making a left turn. So we know in the state of California, since I was making a left turn, and we won't go into the details, but to give you the brunt of it, the person didn't speak English very well. So I tried to help when the police came, transcribe what happened, right? End up saying, yeah, I was making a left turn, traffic was stopped, she was in the far lane, going too fast to a red light, thought it was going to be 50-50, but like you said, we live in California. And then unbeknownst to myself, I find out my insurance company paid out liability coverage. This person went after me and I had no idea. And they said they sent something in the mail, no clue. And the way I found out is I went shopping for insurance and they gave me a great quote. I'm like, yes, let's do it. And they looked it up and they're like, oh no, you paid out a claim. I'm like, what do you mean I paid out a claim? They're like, you're in an accident, da da da. I was like, no, they said it was 50-50. And then nope, they're like, here it is. You paid out X amount of dollars in liability and so and so. And like you said, I didn't even hit the person, they hit me.
And like you say, many people, I have so many clients when I run their MVR, motor vehicle report, to see what their tickets and accidents are, which greatly affects the rate you're going to pay. And I'll say, I'll think, oh, great, I'm saving this person $1,000 a year. And then you run the MVR, oh, ding, ding, ding. It's like, oh, whoops. And the rate just flies.
Yeah.
And some people aren't even aware that it's on their record. And it actually is a good opportunity to, if it is wrong, it gives you the chance to contact your previous insurance company and get some things sorted out. But usually it's right. And, you know, you just pay. And liability claims like that. So I don't know if you've changed your insurance much recently, but when that happened, if you've got a bodily injury claim on your record versus just a property damage claim, it affects your eligibility. Like there are some of the big standalone carriers, you won't be eligible with them for 3 years. They won't take you. You'll have to, and that's actually another good thing about a broker.
March 21.
Pardon?
March 21.
Right. There you go. You got it in your mind. I'll shop that for you when you're ready.
Yeah. You and 3 other people went, and I won't mention the company Geico that you were talking about.
Oh, God. Again, they have one product, one option.
Well, Michelle, I think we got some more amazing gems today. I appreciate your time again, and I look forward to talking to you another time and getting some more value we could share with people to really help them, you know, solidify their household foundation, legacy, and hopefully a life for them and the next generations.
Great. Thank you.
Appreciate it. See you later.
Oh, yeah. Oops, sorry. I wrecked that. I don't know if you want.
Well, Michelle, that's such great information again that you shared with us. You know, as we're wrapping it up today, my last question to you would be, is there anything we left out that you feel might be a key component that you would like to share today?
Yeah, those were that's the basis of the auto insurance, but there are a couple of optional extras. And if you just jump online and you're trying to get the cheapest price possible, you might miss it. You might say, no, I don't want that. No, I don't want that. I don't want to be upsold. And that's fine. If you don't want it, you don't want it. I mean, everything's all about your monthly payment, right? But there are a couple of things. There's MedPay, which you can choose 1,000 up to 5,000 with most carriers. Some carriers offer 10,000 or 25,000. But, you know, if you've got a couple of $1,000 MedPay, if you're in an accident, that covers you yourself. Like, let's say an ambulance needs to come and take you to the hospital. A month or 6 weeks from now, you're going to get a bill for $2,000 for that ambulance. So, or even if it's just you've got to go to the hospital and you broke your arm, or you just have to go to the ER and get checked out. You know, health insurance, that's a whole other beast. but you know, it's so high deductibles and it's crazy out of pocket before you meet it. MedPay will help cover those small expenses without you having to use your health insurance, or it can offset your deductible. And it might cost you $4 a month to have 2,000 to 5,000 of MedPay. And, you know, maybe you want to save the $4 a month because you want the leanest monthly bill, or maybe you think $4 a month for that, that's a bargain. Of course I'll have it. So at least if you know that that's an option, you get to make your own informed decision. And rental car coverage, same sort of thing, maybe $4 a month, so that if your car's out of action because of an accident, it'll cover the cost of a rental car. Maybe you don't need it. Maybe you don't drive much. COVID times, Uber, you know, I don't need it. But it's good to know, because if you get in an accident and you ring your agent, hey, I was in an accident, my car's in the shop. Do I have any coverage for rental car? Oh, no, sorry, you don't. Oh, damn. And it would have only cost you $4 a month. So yeah, just knowing the options that helps you make informed decisions for your budget.
I mean, I could relate to that, being on the flip side of that, you know, early in my younger man life, and I'm paying for the cheapest insurance I can, kind of like you're talking about. And I got into an accident and I go to rent a car and they're like, well, your insurance covers $15 a day for a car rental. And they're like, you can't rent a car for that much, but we'll subtract $15. So in essence, yeah, I had the coverage, but when we really got to it, it was.
Yeah.
Boy, we appreciate your time again, Michelle. I look forward to getting some more education and information from you. I've learned a lot, as I'm sure some other people will. Thank you for your time, and I look forward to talking to you again.
Nice talking to you too.
All right, bye-bye.